Welcome to Markets Now. I'm Michelle Rook with Mike Zuzulo, Global Commodity Analytics. Livestock futures, if you can believe it, all to the plus side on Wednesday's close, but we had corn and soybeans lower, wheat mix. Okay, Mike, let's talk a little bit about the grain complex because, man, we have a lot of uncertainty going on here this week. Not only the bird flu, but we've also talked about end of month, end of quarter, and you got reports coming up. And so the market's trying to work through all of that, isn't it?
Yeah, it really is, Michelle. And it's interesting to note on a daily continuation chart, there's a little gap in the corn market at 426, and we got real close to filling that on Wednesday's trade. So I'm not so sure to add to your list a little bit of chart cleanup on aisle 5, so to speak. And I think the big thing, though, to your point, is that acreage number. I usually the acreage number is going to pick a winner and pick a loser. It seems like the trade has already picked their winner in the beans as far as acreage base versus the corn. We'll see if USDA confirms that or not, or whether that bean corn ratio, which got to a fresh 3-month high this week as of Wednesday's opening, maybe that reverses if the acreage base is not what the trade is thinking, i.e. about 1 million less in soybeans and about 775,000 to 1 million more on corn.
Okay, so if we're at 92 million acres or above, then you think that the market will treat that as bearish and may sell off on corn?
Yeah, I think what we're looking at when it comes to the grain markets in the 30,000 foot level is we're still trading too much supply, not enough demand, i.e. deflation, and we need to go down and find more demand by taking prices lower. So that would not help that case if we saw that big of a corn number.
We also have had uncertainty, obviously, in the soybean market, but now more Brazil production estimates, which were a bit negative as well on Wednesday.
Yeah, they were supporting the USDA being up there at the 155 level. AgroConsult coming in at 156.5 today, and that was about 4 million more metric tons than they'd put out in January, coming in with higher acres by a lot, 1.2 million hectares more than what they had estimated or what CONAB is estimating currently. I think this calls into question, Michelle, something that I've been worried about heading into the stocks report Thursday for soybeans, and that is, are we going to show a bigger stocks number than expected in that the export market is not taken into consideration because we've been thinking and talking and watching how strong that domestic crush has been. So I'm a bit nervous that the supply on the bean stocks could be a little bit on the high side of the trade estimates. I want to see what the trade does, especially in light of this bigger crop news that we got from AgroConsult.
So, Mike, we have, I think, an average trade guess on quarterly stocks, a little over 1.8 billion bushels. So do you think it's going to be closer to 2 or above that, or what are you looking for?
Yeah, closer to 2 is what I would expect if that export number does come in and hurt our crush. It's going to be a tough call. I have no qualms with 1.8, but I think 2 would be price negative.
And the wheat market, what do you think there? Because we did have higher weekly closes in all 3 exchanges last week. Was that kind of a head fake, or what's going on in that market right now?
I don't think it's a head fake. I think we've got some uncertainty in Russia again, and the longs pulled out. We had crop conditions in Oklahoma jump 9 points, Texas 5 points. Longs, I think, jumped out of hard red wheat. And then we've got this report coming out with which the trade is assuming, I think, 1 billion bushels in grain stocks, wheat stocks, and an acreage base of about 47.5 all wheat, 47.3. I think the biggest factor probably, Michelle, continues to be this issue with the outside markets, with the currencies, the Japanese yen making a new 34-year low today, the Chinese offshore currency at a 4-month low. These outside markets, I think, still kind of rule the roost when it comes to the wheat, and really takes away from the idea that we're still dealing with a 10-year low in world wheat stocks to use ratios and the second lowest U.S. ending stocks number going all the way back to 2014. We just don't feel it because we're sitting at that 3+ year low still.
Also, you did mention the inflation deflation play. Talk about the dynamic in wheat and why wheat is kind of the benchmark here that you're watching for that.
Well, it's especially important because the euro currency and the European crop, the Australian crop and the Australian dollar, and how much they compete with us in Asia, and obviously the Russian ruble. And it's just planted all over the place in the world. And I think the funds really look at that as an inflation deflation hedge when it comes right down to it. So I think between that and the fact that we do have, a pretty decent weather situation in most parts of the country right now, no one wants to stick their neck out and buy wheat, even at these price levels, because they don't see the demand base for the U.S. market, especially.
Gotcha. Somebody should ask you earlier, do you feel like, how are farmers sitting going into this report? Have they sold what they want to sell, at least for the time being, or not?
Yeah, I really think they have. I've heard from clients in the Central Corn Belt and Bean Belt, especially, where the elevators have been shutting down. Some of the soybean crushers shutting down. Some of the larger terminals shutting down, and for the corn, and big feeders in Northwest Ohio. So I do think the farmers caught up, and I think you bring up a huge point. We want that on-farm number to really shrink in the report on Thursday compared to what we saw in December.
Something to watch for sure. Cattle market did bounce here today. Have we worked through all the negative news from the cattle on feed and high path avian influenza case in dairy cattle? Is the panic selling done?
Yeah, I think the panic selling is done. I think the funds are on hold and on pause right now, wanting to gather more information, specifically probably wanting to look at the monthly close and the quarterly close, which is now right around the corner. I don't think you can signal the all clear yet, Michelle, because we are starting to see some slippage in negotiated cash cattle trade. We started to see some slippage in some of the cash feeder prices around the country, as far as in the Oklahoma and southern Kansas areas Wednesday afternoon before we went on the air. So I do think the cash is starting to give up a little bit with this futures break. So I would say can't signal the all clear yet, but maybe the easy downside push is over with for now.
No doubt. Hog market to the plus side. And what's your thoughts about what's kind of been driving that? Has it been cutouts in demand? Is this squaring into month and quarter going into the hogs and pigs report, or what's going on?
Yeah, I don't know if they've really traded the hogs and pigs yet. Maybe a little bit through the spreads. I think they've been really worried about China still and the domestic cutout prices, and so we've been able to hold in there really nicely in the Chinese price action. Other than Wednesday, I think it was down 1% in the Dalian futures. HPAI is probably starting to wiggle its way into both livestock complexes on and off. And I think that's something we want to continue to watch in case we do cut back on the available meat supply, in case that disease is worse than we understand it to be right now. That could have a knock-on effect to the hogs, not unlike what we saw in that 2014 time period when we had quite a bit of disease pressure from a variety of sources.
All right. Thanks for joining us, Mike Zuzulo, Global Commodity Analytics. That is Markets Now.